from Street Fighter TradingSystem.com. Alright guys, so on this video I want to talk about risk and reward. Even though I'm talking about it at the very last lesson of this foundation course, it is actually the most important part of trading. And you know what? I can even tell you that if you play randomly but know how to do proper money management, you will still be a winner in the long run. So you can even forget all the previous lessons and only focus on this very last lesson. Right? So what I want to show you is that even if you only have a 35% winning rate, right, and following a reward of 2 for a risk of 1, you can actually achieve and win money. So for it, let's take a look at the spreadsheet that I have created, right? So on this spreadsheet over here, so let's take a look at what will happen if you are trading in 1 month. So in a month, normally in average, you should be able to at least have 20 trades. So as I said to you plenty of times, some days you will have 0, some days you will maybe have 5, some days 2, and so on. So it will be a variation of many days. But if you average it on a month, right? So in a month you have 20 days to trade, and you should be able to have in average per month 20 trades. Okay, then we are going to say that when we win, okay, we win 2 units, and if we lose, we're able to use only 1 unit. So this is a 2-to-1 reward to risk ratio. Okay, we win 2 and we are willing to lose 1. Okay, so here I put a spreadsheet together to show you if we take 20 trades in a month and we win 2 when we win and we lose 1 when we lose, what will be our profit at the end, right? So only in terms of unit of risk to reward. We don't even talk about dollars or baht or whatever, right? So if my percentage of win rate is 0%, so I'm very unlucky, so I lose 20 trades, right? So my risk is 20. Right, 20 trade lots times my risk is 20, right? So I will have in terms of profit minus 20. Okay, if I have 5% win rate, I will win 1 trade out of 19. So my reward is 1 times 2, right? So 2, and then 19 times 1, so 19. So my profit is minus 17. So I did this up until 100%, right? So you can see that there is a point where I'm starting to be positive, and this point is 35%. So if I am able to follow the rule of reward of 2, when I lose I put a risk of only 1, right? I will be able to be a winner at the end, right? So 35% is not a lot, but you see, one of the major problems that beginner traders are doing is that they don't manage correctly their money, and if they don't manage it correctly, they will lose, right? So me, what I use usually, so I do play the ES, but let's take a look at the MES, because I think that if you start basically playing live, it's a better idea to risk your portfolio. So let's say you have a portfolio of $1,500, right? Starting to trade with this. You don't want to risk like $50 on the ES, because in few trades you can wipe out your account, right? So you want to take something where the risk, when you take a risk, you don't lose that much of your portfolio. So on the MES, basically, we will see that if you are willing to take 2-point loss, it's basically $10, right? So you're willing to take $10 loss every single time. This will be your risk. And then your reward is 2 times $10. So you should always, if you're planning to lose $10, you should always plan to win $20. Okay? So let's take a look at an example on the chart of what I mean by this. Right? So I have my chart here of the ES, and I look at my buying and selling opportunities. So I'm not even going to talk if it's a good buying or selling opportunities. I just want to show you the risk and reward that you need to do if you had to enter this trade, right? So on the last lesson, I showed you that you need to have an entry point and an exit point. So the entry point will be one tick below the bar that creates like the swing low, right? And I need to have a stop loss which would be above the bar that creates this signal bar basically. So if I do this, what is my risk to reward? My risk to reward is actually the length of this candle bar, right? The length of this candle bar is my risk, is what I'm willing to risk to go inside the trade, right? So because if it goes against me, this is the money that I will lose. So to be able to compensate it, I need a reward of 2 times the size of this, right? So if I had to enter this trade, I need to profit, and I should not remove my profit target until it reaches this point, right? So in this case, if I would have entered, right, I would have won because my reward would have hit over here before it hit my stop, okay? So another example on this candle, right? My reward is, my risk to reward is the size of this candle up until here, right? So one tick above, one tick below. And then I try to shoot for 2 points, for 2 times my risk, right? So my risk to reward will again be hit, and I would have won this trade. What about, let's say I entered this one, which was a too late to the party trade, right? So I'm taking this risk, and my reward will be here. So we can see that what's happening if I entered over here, the price would have reversed and I would have lost, right? I would have been stopped out because I would have put a stop loss right over here. So it's okay. I won 2, right? So on this example, I would have won 2 times, and on the 2 times that I won, I had a reward of 4, right? I lose 1 time and I have a loss of 1. So the the profit is 3 because I win 4 and I lose 1. Okay, let's take a look on the upside. It's exactly the same thing actually. So we go to the upside. We know that our risk to reward candle is this one. So I'm going to compute, I'm going to check what is my risk. And my reward should at least be here. So I will take the profit only if the price hit this level. And on this case, I would have had a profit because it hit my target. What about this one? Right. So again, I compute the risk between this and this. This is what I'm willing to risk to lose if the trade goes against me, right? And again, I would have won 2 times, right? So what about this one, right? So up, I take this risk, right? So the risk of this candle is very low, but the setup is really bad. So even though the risk that you're willing to take is low, if the setup is bad, just don't take it, right? We're not here to take bad setups, even though the risk is low. So here you saw the risk is low, the setup was bad, but it still reached our target. Okay. What about this one, right? So you see that here, if we would have taken this, it was a bad setup, but let's say we imagine that we don't know anything about trading and you haven't listened of the lesson that I've given. You would have entered this trade and then you would have been stopped out because the price went down before it hit our target. Okay, so as I said, I want to repeat first that you always, when you enter a trade, you always need a stop loss, right? So you need an entry point and a stop point and a profit point, right? You never enter a trade without having this because it can go, if it goes against you, right, and you don't have a stop, let's say you would have entered without a stop, the price could have gone down forever and then you will be losing like all your money and all your bank account. Don't how to say, uh, you should not never do this. You should never think that the price is going to go your way. You should always have a protection. Protect your money. Okay, never go on a trade without protecting your money. So I'm sharing this with you guys because 2 years back I made a trade on Bitcoin and on Ethereum where I didn't have a stop loss, and I lost quite some money on a single trade. I lost like $300 on a trade because I didn't have my stop loss, and it was not even my fault. It's the platform that didn't put my stop loss because my internet connection went down, right? So until that day, it's really something that I will never do again, and I will always check to have a stop loss before I enter a trade. So to wrap up on this video, I want to reaffirm that trading has a risk, right? Because we cannot have certainty that the price is going to go on the direction that we want, right? We can only have a sense of probability, right? And uh, you will need to, if you want to be successful in trading, you will need to embrace risk, right? So I think that most of the people that fail in trading is because they cannot embrace risk, right? I also showed you on this video that good money management, right? So good risk to reward management. If you only have 35% winning rate, you will still win. You will still win money. If you follow strictly this foundation course part one, meaning playing with the trend, searching for buy selling opportunities only on the first and second retrace, looking at bounce on the 21 EMA, having a good candlestick, you should be at least able to reach like 70% win rate, which is more than enough to win money in the long run. So that's it for today. I also want to say to you that you should stay tuned because we'll have a season two. So this was the part one. You will have a season two probably coming next month where I will show you like different style of trading, and most importantly, what style I'm trading today, which is more advanced, but will give you other opportunities on the market, right? This will be the last lesson of this part, but I will also create some trading example, and Dean from streetfightertrading.com will also create some FAQ videos to go into deeper explanation on basically what is an inside bar, what are those candles, how we can go into retrace, what is Fibonacci levels, and whatsoever. So stay tuned, it will be coming soon. Stay safe and see you soon.